Welcome everyone. We've all been there, tempted by a deal that seems too good to pass up, only to realize later that it wasn't as great as it appeared. Today, we're uncovering 15 bad money deals that people fall for time and time again. By recognizing these pitfalls, you can make smarter financial decisions and keep more of your hard-earned money. Let's dive right in. This is Wealthlocity. Here you create, protect, and grow your wealth fast. Number 1. Extended warranties. Extended warranties might seem like a smart way to protect your purchase, but in most cases, they're a waste of money. Retailers push these plans because they're highly profitable, and the likelihood of needing a repair often falls outside the warranty's coverage terms. Most products either fail within the manufacturer's warranty period or last long enough that you won't need extra coverage. Plus, some credit cards already offer extended warranty protection for free. Retailers know that only a small percentage of customers actually use extended warranties, making them a significant profit driver. Tip: skip the extended warranty and instead save that money in an emergency fund for repairs or replacements. Number 2. Rent-to-own agreements. Rent-to-own deals may appear to be an affordable way to acquire furniture, appliances, or electronics, but they're often riddled with hidden costs. The total price paid over the term of the agreement can be 2 to 3 times the retail value of the item. These agreements prey on people who can't afford upfront costs, locking them into long-term payments with excessive interest rates. Many customers fail to realize the total cost until they've already spent far more than the item's value. Tip: save up and buy these items outright to avoid the exorbitant costs of rent-to-own agreements. Number 3. Payday loans. Payday loans are marketed as quick fixes for short-term cash shortages, but they come with astronomical interest rates, often exceeding 400% APR. Borrowers can easily become trapped in a cycle of debt as they struggle to pay back the loan plus fees. These loans are designed to roll over repeatedly, ensuring the borrower stays indebted. The quick cash comes at the cost of long-term financial stability. Tip: explore alternatives like personal loans from credit unions, borrowing from family, or building an emergency fund to avoid resorting to payday loans. Number 4. Gym memberships you don't use. Gym memberships can be a great investment in your health if you use them. However, many people sign up with the best intentions and end up rarely going. Gyms count on this, which is why they offer long-term contracts. Unused memberships can drain your budget month after month, adding up to hundreds of wasted dollars annually. Many gyms make it difficult to cancel contracts, locking customers into paying for services they don't use. Tip: try pay-per-use fitness options or commit to a home workout routine before signing a long-term contract. And number 5. Timeshares. Timeshares are often sold as an affordable way to enjoy vacation property, but the hidden costs can make them one of the worst financial decisions. Maintenance fees, special assessments, and difficulty reselling make them a bad deal for most people. Additionally, the resale market for timeshares is often oversaturated, meaning you may not recover your investment if you decide to sell. Tip: if you love vacationing in a specific spot, consider renting accommodations instead of locking yourself into a timeshare agreement. Number 6. Free trials with hidden fees. Free trials can be enticing, but many come with hidden strings attached. Companies often require you to provide credit card information and charge you automatically once the trial ends, hoping you'll forget to cancel. These charges can continue for months if you don't closely monitor your statements. The hassle of canceling can also be a deterrent for some users. Tip: set reminders to cancel free trials before they expire and monitor your statements for unexpected charges. Number 7. New car purchases. New cars lose value the moment you drive them off the lot. Depreciation is steep in the first few years, meaning you're paying a premium for something that quickly becomes worth much less. While the allure of a brand new vehicle is strong, the financial hit often outweighs the benefits. Opting for a lightly used car can save you thousands without sacrificing reliability. Tip: consider buying a certified pre-owned vehicle to save money while still getting a reliable car. Number 8. High-interest store credit cards. Store credit cards often come with flashy discounts or rewards, but they also carry some of the highest interest rates in the credit card industry. If you don't pay off your balance immediately, the interest can far outweigh any initial savings. Additionally, many store cards have restrictive terms and limited usability outside of the issuing store, further reducing their value. Tip: use a low-interest credit card or cash to pay for purchases instead of signing up for a store card. Number 9. Fancy coffee and daily lunches out. It's easy to fall into the habit of buying a daily coffee or eating out for lunch, but these expenses add up quickly. Spending $5 a day on coffee translates to over $1,800 annually. While these small indulgences seem harmless, they can significantly impact your savings goals over time. Making coffee at home and preparing meals in advance can save a substantial amount of money. Tip: brew your coffee at home and meal prep your lunches to save money without sacrificing quality. Number 10. Luxury name brand products. Many people are drawn to luxury brands for their status appeal, but you often pay a premium for the name rather than the quality. Many non-branded or lesser-known alternatives offer the same quality at a fraction of the cost. Consider whether the added value of a brand name justifies the price, especially for items like clothing, accessories, or home goods. Tip: focus on value and quality instead of brand names when making purchases. Number 11. Weddings and big celebrations. Weddings and large celebrations can cost tens of thousands of dollars, putting couples or families in debt for a single event. Many vendors charge a premium simply because it's a wedding. While these events are memorable, it's essential to balance the celebration with long-term financial health. Simple, heartfelt celebrations can be just as meaningful. Tip: set a realistic budget and explore cost-saving options like DIY decor or off-peak dates. Number 12. Expensive insurance add-ons. When purchasing insurance, you're often offered add-ons like roadside assistance or identity theft protection. While these can be useful, they're frequently overpriced compared to standalone services. Assess whether these add-ons truly meet your needs or if you can find cheaper alternatives elsewhere. Tip: evaluate whether you truly need these add-ons and shop for standalone services that may be cheaper. Number 13. Investment schemes. Promising quick riches. From pyramid schemes to get-rich-quick opportunities, many investment deals promise high returns with minimal effort. These schemes often lack transparency and carry high risks, leading to significant financial losses. Always be skeptical of any deal that guarantees returns with little to no risk. Remember, legitimate investments require time and research. Tip: always research investments thoroughly and avoid deals that sound too good to be true. Number 14. Overpriced tech gadgets. The latest tech gadgets are often marketed as must-haves, but they're frequently overpriced compared to previous models or alternatives. New releases often come with only minor upgrades. Waiting for prices to drop or buying refurbished models can save you hundreds without compromising on performance. Tip: wait for prices to drop or buy refurbished models to save money on tech purchases. Number 15. Subscription services you don't use. Subscription services like streaming platforms, meal kits, or beauty boxes are convenient, but they can add up if you're not using them regularly. Many people forget to cancel unused subscriptions, leading to wasted money every month. Regularly auditing your subscriptions can help you identify services you no longer need or use. Tip: audit your subscriptions regularly and cancel those you no longer use. And there you have it, 15 bad money deals everyone falls for. By being aware of these common traps, you can make smarter financial decisions and keep more money in your pocket. Which of these deals have you fallen for in the past? Let me know in the comments below. Don't forget to like this video, subscribe for more financial tips, and share this with someone who could use these insights. Thanks for watching, and I'll see you in the next video with more money in your pocket.